Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news, if we can find any. My name is Joe Nikruto, and I'm here again with
Dan Hussey. How is everybody today?
doing terrific today. We've got some stuff to cover. Hopefully, Argentina still sticking in everybody's craw. Sent them about $20 billion, I think. Going to give a few less billion to the American farmer. Maybe we'll talk about that a little bit. We're going to dig deep into the grain and livestock markets to see what we can do to get folks up to speed on some of this price action and how best to navigate the risk around these types of market movements. Dan, before we get started, it's got to be about 86 degrees here where I am.
Crazy.
Northern part of
It's October 3rd, man. I'm not going to complain too much, right? I'm still getting out riding the bike. I could finally get out and run again. I did not bet that I missed the middle of summer, and here I am getting all the summer I can get my hands on.
October Marathon, or I'm sorry, the Chicago Marathon.
Yeah, at the end of the month.
That happens October 12th this year, I think could be a little spicy.
Yeah, I would imagine. I think I haven't looked at a 14-day, but I don't think it's showing signs of major relief in these temperatures just yet. And even if it's up in the 70s, that's still probably near record temperatures for that race. Fun fact, October 26, 1986, the day I was born, was the day of the Chicago Marathon back in the 80s. So they've moved that race up because of weather, because you have it at the end of October. I'm sure many Midwest kids, and certainly in the Chicago and Indiana area, know that, hey, there's a chance you get snow, or at least it was when I was a kid. You got snow that late in the month. And I remember instances of Halloween having to jacket up and go out with a snow jacket on. But anyway, long story short, right, like this weather we're having is an interesting late summer where we're getting, I'm pretty sure we've got to be making record temperatures from October. I'm just guessing on that. But 86 degrees with heat indexes, that's earth-shattering. And we'll cover a little bit later anecdotally how we see and are hearing stories of how this is affecting that, or how it affected the final finish, and even is leaving some crops maybe even a little too dry out in the field. We're getting reports of soybeans down in the single digits for those moisture contents, and reports of how that's affecting yields. So I think there's still a developing story, right, on where those yields are going to land this year, and coming out of our last reports, and certainly seeing some new analysts and institutions putting out their yield estimates, like StoneX this week. What were they? They were at like 185, I think, on corn, and 53.8 maybe on beans, I want to say, just off the top of my head. Those are some big numbers still, even after seeing definite reports of disease and stress on this crop towards the end.
Before we dig into all that, if you're looking for a timely, concise commentary on the grain markets, you can sign up for Karen Braun's Zaner newsletter. You've certainly seen Karen online, big presence on Twitter/X, 86,000 followers. No exaggeration to say that people really care about her thoughts, because she gathers data and provides quality insight. That's why they are so interested, in my opinion. You can get her in-depth, easy to understand analysis straight to your inbox. The link is down below. It's quick and easy to sign up. As always, one of my favorite price points is $0, no dollars, no cents, no obligation, no risk. Take a minute, click that link, get signed up. You will be glad you do. Oftentimes, we don't know what we think until we see what Karen has to say. Sign up and you'll see for yourself. Dan, of those markets that we were covering rapidly there, which one should we begin with?
And let's get wheat out of the way, because there's the least to say there.
Nobody wants to talk about wheat. So
the one green spot on the row crop board.
We opened the week at new lows for the moves on this weekly chart, which I just love. Opened 519 this week in the December Chicago wheat. The high was 522.5, low 502. Close 515 and a quarter. Last trade we saw down yet again 4.5. Funds, I believe, short about 100,000, 99,000 Chicago wheat, which is a pretty big deal.
Yeah.
And I don't know. I don't see anything technically. What are we going to say? New lows.
No, you're right. It's a technical downtrend still intact until it's not. You're neither overbought nor oversold categories in that daily RSI. So the market's very, in other words, comfortable where it's at. and has room to either side to go up and down within that indicator. 18-day moving average is still out above us at 519 and let's call it 3/4 there. Downward sloping trend line right along that area. The 50 and 55-day moving averages up around that 530 mark. 550 for the 100-day, 575 for the 200-day. Lots of resistance is what we're pointing out on the way back up if this rally continues. 2.5 days up off of a low with a nice wick like that off the psychological $5 handle is certainly not something to ignore, but it's not a trend reversal in my humble opinion just yet. You do have some of that volume participation here, but on that original low. But then look, you had 2 days of declining volume as you ran up into the 18-day. Till you get a nice volume push out over, I think this like technical area, this 520 to 530 area, I'm not super confident in calling a low for the wheat market just yet. And lastly, Joe pointed out that 90,000, almost 100,000 short in the fund position. That's almost half, solid amount of that open interest that is still in this market. So maybe as we head into December's roll, that could force some of those players out. But at this point in time, it's a downtrend until it's not. And I think some of those fund categories are going to be very comfortable while we're still below all of these technical indicators.
Very comfortable being short. November beans, nice. Not a horrible looking weekly chart compared to the close here today, which was not great. Opened the week at 10.11 3/4. High was 10.28 3/4 in November beans. Low 9.93 3/4. Spent very little time down below $10. Closed 10.18, up 4 1/4 in beans. Just outright funds are long now. We estimate, ADM helps us estimate that they're long about 5,000 beans after yesterday's big push. Showed up yesterday in the afternoon, bought 10,000 corn, 10,000 beans. Post Truth Social posting. And one thing I wanted to say, Dan, and tell me what you think about this, is that they use that technique to great effect in downtrends, right? So you get into these areas of resistance and then you come out with words that the algos snatch onto: Trump, beans, Chinese, purchase, and then the algos kind of get fired up, and then you get your regular human speculators fired up. Next thing you know, you bought 10,000 beans, 3,000 contract increase to open interest is a pretty clear signal that new money has come off the sidelines to try to get long, and a very effective and interesting application of that technique here. What do you think about that? I mean,
I think you're spot on. And it was down at a time where the market was sitting on proverbial support. I mean, this is the fourth major test trying to break below $10 over the last year, since December of last year. And November beans hasn't done it. This market is very comfortable at basic, let's just call it 10.25, 10.30. That's the fair price of new crop U.S. soybeans. And it has been for a year. That's what this chart says. There's definitely staunch and stiff resistance still above around 10.60, 10.80, and $11. We can see all the reasons up there: trend lines, old lows, and that band of highs. 200-day, 100-day, and 55 moving day averages are basically the same print here at around 10.26, 10.25, and 10.27 respectively. And the 18-day moving average was the big figure, well, the shorter term figure that none of these row crops were able to really break out above, at least corn and beans as we've seen, or excuse me, beans and wheat as we've just seen. And the 2-day rally, like you said, definitely a little bit of a volume push up. That's nice, right? But then today's absolute lack of follow through and rejection at the middle of the range just doesn't give me that confidence that soybeans need to just rip out of this range. Could we chop around and trade back up? Yes. Let's put this into perspective. Each other time we've come up off the lows off of soybeans, did you see them stop at the 18-day? Not really. We kind of just go straight through it and then hold it as support on the way back up. We did fight along, have a little bit of a fight with it for about a day here. I'm back in August when we rallied, but this is the first time where we have been for 2 days just staunchly rejected at that 18-day moving average with the close below it. I think early next week, you would need to see this market get excited, get out over those levels. Otherwise, I hate to be the bearer of bad news. When you take a bigger step out and you look at the bigger daily charts, this looks like a giant bear flag, and I would be anticipating downward continuation below $10. And we'd be behooved if we didn't mention the idea that, $9.50 to $9, somewhere in this range is probably where the next support might be if that breakdown occurs. I'm not willing to say that yet either, because we're still, right, this week's close was just back to the middle of the range. Something can happen. Trump can say something, can anything could happen over the weekend where this becomes excited again and we have a move back towards 1060 and, back inside this range. In fact, I think coming up off this low and this downward sloping trend line, like yesterday and the day before, if you'd asked me, I'd say, yeah, I think we're going back up there. Today, just because of the close and the failure for that push back above the middle of that range of those technicals, I'm a little more conservative and willing to say that. And I'm definitely thinking more about, okay, let's just think about for a second, in case we do go back down to what was today's low, the 994 area. What do you want to do if we do that, right? And I think there's an opportunity to be a short or a seller even just from a technical speculative standpoint if that happens. But for all intents and purposes, folks, those of you that need to think still about getting sales done or anything, I think that $10 figure is a great place to still think about a floor. And while we're above it, it's still a floor, not a ceiling, right?
That's a low from earlier in the week. So today's
That's
Friday,
correct.
Thursday, Wednesday, got down around 994, got all the way back up to 1024, which is a hell of a move, and even higher here today. And I would caution that you not only have the 18-day there, but like every other day,
right, everything
other than the 10, right? 10's below. Yeah. And then that's 4 other separate moving averages. So you got a really good, solid wall of spaghetti to chew through there, which you could not do today. And I also would caution that with that type of resistance in this type of market under these circumstances, you're gonna have to have more than one bite at the apple to get
right.
Right.
I wouldn't be so cautious and non-optimistic if we had China on the books, if we knew they were waiting in the wings to truly do some purchases. But unfortunately, while the politicalization of trade drama continues, this market seems very content to be finding its way back to the middle of this range.
And shout out to Trevor, who called this morning and said, okay, I have some beans and I think I would like to get more money out of them, but I would also like to sell them at the best possible price.
So won't we all?
What do we think? And so what we think is that if you do get some sort of announcement, you do get some sort of progress to some sort of Chinese deal, and we really can't assign odds to that anymore. We're so far stretched out. But the fact remains is that he did post, and they are talking about getting off to the sidelines and doing some soybean discussing here in 4 weeks. So you're risking that. And then the other thing that you're risking is if we can't get out over this resistance and you don't get good news on the Chinese front, where do you think you're headed then? 980 to me seems like easy pickings. And so you're kind of yet again trapped at this tipping point, and you're likely to be damned if you do, and you're likely to be damned if you don't. And you should get out your sharp pencil and see which one of those damnings is going to be least financially painful and choose that one, right? Which is what you're trying to say, is that if you are behind or you are going to you're going to need to make cash payments, you got to find a way. He wants to talk about it. The basis hasn't been great. You're looking certainly into a pretty big hole there, but this is not a place for no action.
Yeah, absolutely, right? Like we know until you're out over this downward sloping trend around 1050, the idea or the 2 lines I just put on the chart are definitely still in play. The idea that we're just consolidating, we'll break down, push us $1 to $1.50 lower before finally capitulating and rallying back. If $11 beans is something you want to sell, just based off this idea alone, there may not be the opportunity to do so until March or May of last year. And this is I'm just arbitrarily putting 2 lines on the chart and guessing on how long a dip down back up would take, right? There's nothing scientific here, folks. It's just to visually show that, hey, a move down to 850 and this type of leg lower for November beans, that's not really out of the question. It's basically within a giant channel that November beans have been in. And that's kind of how I foresee this potentially. The worst case scenario playing out is that sell off before a rally. And this is all just no one knows. But the fact is that we've held this area as support. So you get out over this level and you're probably going to have something that looks more like this in the short term.
That's good educational content right there, Dan. The essence of technical analysis is
absolutely right.
2 lines on a chart and a guess, and you got something.
Right. And generally speaking, I would say that if you asked many technical analysts to tell you how does a flag or something like this break down, these are the 2 scenarios that probably pop up as most logical, right? Either a break out of that range to the upside, then a test of it as support before continuing higher, or it could also fail and break back down. Markets don't just go in straight lines, or that break down below that range, and then truthfully this rally back up to test it. And then I humbly would think that would be our seasonal low, so they would probably rally higher. But yeah, all we're trying to do is showcase how no matter how much work you put into this chart to guess which way soybeans are going, there's still two outcomes that say it could go in either directions.
We got it narrowed down to two.
Right? I don't care how smart you think you are.
Terrific.
This, the product, 100%, it'll do up. It'll go up or down.
I think beef meal is still prompt. If we look at December meal, 274.60 opened the week, 282 was the high, 270.10 was the low, closed 278.60. That's up 4 full points. Nice, rare, positive week in meal. Yeah. After making a new low, came down and traded 270, which on this chart is new low for the move, but got back up to 278 and even above 280 there for a bit.
Rejection at that 18-day, is
that what it is?
That red line on this chart, that rejection in the 18-day, we got very oversold down here in the RSI. And so I've a couple of days of short covering. I'm not unexpected. Did see a little bit of a volume uptick here, but as you can see, today was a very light volume traded day. So yeah, we failed at that 18-day. Doesn't mean we can't push out over it, but that's something I would want to see. And this 50 and 55 and 100-day moving average and trend line, that's somewhere up around this 280, 290 area. Or excuse me, 290, we're at 280, but somewhere around that 290 area could be next resistance on the way back up. Definitely looks like a loss of momentum to the downside. It couldn't even make it down to this downward sloping trend line that was angling on the lows of the meal. We diverged from that with a little bit of bullish momentum. I'm willing to say that if it can get out over the 18-day and today's high, you've definitely got to test this 100-day probably coming up. And then like wheat, the meal seems to like to test that 200-day every so often. And we have not tested it since January of this year. So all of these markets, I think, are due for that move back towards a test of their 200 days at some point, just because we've been away from it for so long. And meal is a good example of that right now. Lots of lines in the sand that come in here, not too much higher than we are. We get above that level, I think there's more of a high probability setup for a little bit of a squeeze higher. $1 million question is if this is the low, and that 18-day moving average may be the line in the sand in the short term to help us determine that.
December oil, a different chart altogether. Opened the week 50.25, 50.75 was the high, 49.20 low. Last trade 50.05 down 14 on the week. But Dan, this does not really look like a chart that wants to go, doesn't really seem to be racing to lower prices, right? We seem to kind of be I hate to say well supported, but
in the bigger picture, right? Since over the last year, oil's been very well supported. And this does look like some kind of corrective bull flag after this first major move up. Coming back to fill that gap. We're still below that 18-day. It hasn't respected it too much in the downtrends. Okay, we'll watch it. What I hate about oil right now is you've got the 100-day rolling over and 55-day rolling over as well. But you know what? That's what happens when you come back down to test the 200-day moving average down around here around 48.50. So we've just pulled back to that 200-day. I think we pulled back to this old, if you go really back on this chart and kind of look, there was a bit of an old range that we were below at the 48 figure. We clearly broke above it, tested a support, then got that runaway. I feel like we're coming back to test this major supportive area around 48 to 47 from both prior highs and that major 200-day moving average. So we'll see. I agree with you. I think that this is very choppy to the downside. Looks very corrective to me. Back out over that 18-day, I think every other time we've got it, people have gotten excited when the market takes off. So I think in oil, there's a real indicator here that get back out above that 18-day. You can see it almost everywhere on the chart. There's a couple days of rallying at the very least, which is a great way to start a position off. That could be again, short-term signal to help us gauge when these markets are finally done.
December corn, another market that, to me, looking at this weekly chart, does not want to go any lower. Open the week 421, high was 423, low 410.5. Last trade 419, closing near the top of the range for the week. Down 3 on the week. I believe the funds are short an estimated 97,000. Bought 10,000 yesterday to shrink that short position. And from what I read, did they say open interest went up about 6,000 contracts?
And that actually looks accurate. You see the open interest was diving for the last couple of weeks on the way up. Then you actually see it. You can barely see it on the chart I have put up here. Let me see if I can make this a little bit bigger, just so you can all see how this open interest does tick up here. See it curving up, just like you said.
Yep.
Interesting. And on this volume too, and I didn't mean to cut you off there, but I think
Not at
that's a
all.
good show of some participation here from the buy side on this pullback.
Money coming in off the sidelines really is what that is. And
Exactly.
establishing new long positions in kind of an awkward, like I'm not, I just is now the time. We could not get down below 410 for the week. And here we are closing at 419. And that's short of closing positive on the week. That is a pretty positive looking weekly candle. Can you extrapolate that onto the daily chart? What do you see on the daily chart?
Definitely, right? You got this resistance we've banged into, the old lows from September of last year, December of this year, or last year, and then early spring that we broke below, and we've been unable to break back above. 18-day moving average, we broke back below, but we're back up to test it this week. And that was also after a pullback to test the 50, 55-day moving average area, as well as this downward sloping trend line against the highs. So corn has made some very good technical progress higher, right? It's broken above all of these levels, held them as support. And it's effectively, this is a really technical looking chart is what I'm getting at. So there's a real constructive buyer on the way up. You can see the volume picking up as the buyer comes in. You can see how the market even got to overbought conditions, unwound that, got oversold. And in the essence of doing that, we saw, like Joe said, an uptick in open interest and a big pop in buy side volume for the last 3 days ago. It's obviously waned away a little bit as we traded up into the 18 and 100-day moving average. But I think the more I'm thinking about this market and looking at it, I think I'm discounting the idea that we didn't get much progress done this week just because there wasn't much to chew on, right? A lot in agriculture is, I think, dictated by how some of the politics are going right now and some of these trade deals. So we need to at least accept the fact that the market may not be ready to do the thing it needs to do yet. And the participation hasn't totally been there yet. It's good to see it upticking in corn. I think there's some confidence there with the disease and other things we've seen out there that corn yields are going to be lower than some of the numbers we've seen. And of course, I think that's a big reason why we're well supported. Well, outside of course, the demand side, right? That goes without saying that corn demand has been very strong. We've eaten that horse. I hope didn't make assumptions that everybody knew that, but that's generally why corn's much better supported or has been, right? The 100-day moving average, though, has been resistance. And that 200-day just above, I'd love to see us get up to test. So, like, if we break out above the 118-day here, I do think we're good for that 10, 15 cent rally towards the 200-day. Could we get all the way up to this much larger prevailing trend line around 450? Yeah, I think we possibly could. But in the very short term, you still have a market that is trapped below a couple indicators. And I hate to call the 415 area a neckline, but that's what we got now. With a little left shoulder, a little head, and a little right shoulder that formed today, and a neckline right at that 50, 55-day moving average area at 415.
That's very interesting.
But I do have to point out, we faked below it already, right? So we couldn't close down there, like you said, this week, and we're back above. How many times have we talked about head and shoulders patterns being the great inverse things? You do the opposite.
Much more powerful when they fail.
And the failure here on the right shoulder is back out over the 18-day and 100-day moving average. I think there's going to be a lot of stops there, right? A lot of people who have shorted the market put their protection above theirs, thinking, hey, if it goes there, I don't want to be a part of it. And that's exactly what is the fuel for a rally if we get through that level.
I bet everybody would love to see that.
I would too. We're just due for it. And think of what it could do dragging corn or wheat and beans with it.
You look at feeder cattle, speaking of rally, and weekly chart sort of puts into perspective the rarefied air that we still yet exist in. A lot of talk about cattle and maybe even feeders topping up here, but this chart says not so fast. There's certainly a lot to discuss with the rejection of price over 360 in November feeders. But for the week, before we get ahead of ourselves, 355, 97.5 open, high 362, 77.5, low 350, 62.5, close 355, 42.5, down almost a full point. I think that says in November feeder cattle. But the interesting thing, before we dive into the technicals, I saw a piece of news this week that said they have an injectable, almost a vaccine for the cattle, and it is going to eliminate the threat or reduce the threat of this new world screw worm, which is the reason that the Mexican border is closed. And the reason you can't keep cattle in the country.
You're right. If that's a development and there's no fear of screwworm, well, we just had the solution to high price cattle in the United States.
It's going to be hard to keep them up here. And I think what this chart tells you that is that you got inside week here closed in the middle of the range, and prices over 360 kind of rejected. Certainly trade still continues. Cash feeder prices still rather elevated by any estimation. Business must continue on. But if they do come out and confirm that this vaccine, it doesn't take a lot of imagination to see how that could correct this
right. If the only reason the border's closed and we can't import animals right now is because of screwworm, if that's no longer a thing, well, it's not rocket science.
Fat cattle weekly chart is the same story here. Open the week at 234.50, high 236.45, low 231.75. Last trade in Dees live cattle 234.50. That was up just fractionally, up 20 on the day. No great shakes, kind of right where we started the week. But that's another market another chart that says we're really taking a look at this. Now, in my opinion, fat's a little heavier technically than feeders. What do you think?
Yeah, definitely. Still below that 18-day. Absolutely no momentum back to test the high end of their range this week. That was something that the feeders were able to do, right? We had 2 tests of that upward trend line and closed above the 18-day. Definitely a different look. Don't get me wrong. This is still consolidation at highs until you're above that trend line or below the 55-day and the lower trend line. This is a choppy range and it's going to chop you up until it's not. But the fats, as you can see here, feeders holding up a little bit better there compared to the fats that are basically just sitting on support. Support hasn't broken yet, so it's there until it's not. But I was surprised that here in that rally with the feeders 2 days ago on the 1st, we didn't get any sort of rally back to the high end of the range for the fats. And next week, I think, as this market is really consolidated and the range is tightening, I think next week we're going to have an answer. And I'm fearful with the news you just broke that if that somehow becomes a development over the weekend with cattle so weak, these are the types of levels, this trend line in the 55-day and closing on top of it, that we could gap lower and then have whatever the market wants to do theirs. But I'm not saying we're going to gap lower. We held up. We closed at the 18-day above trend lines. It's supported until it's not. And at this point, I would expect a rally back, honestly, towards 340, so long as we stay above, let's call it 331 or the lows of this week.
231.
231, yeah. Pardon me.
No, that's okay.
I got feeders on my mind.
Yeah, for sure. Same.
Isn't it crazy though? These prices have gotten so inflated and so big. You do that. I legitimately was looking at a live cattle chart the other day, thinking it was feeders because of the 2 handle, and then I'm like, oh, duh, no, we gotta adjust the brain a little bit. But here we are.
Extended wedge tells me that you're not going to be asking this question for much longer, right? I mean,
100%.
Really are stretched out.
Yep. We're stretched. And, this, again, kind of like the beans. It's an upside down chart of the beans in a way, right? That Novi bean chart. You're going to break out higher and then come smashing down, or you're going to go lower and then come back up. Watch for that trend line. Unless you're going to play the range, wait for the range to break.
Good point. You take a shot here in the middle, it's flipping a coin.
Don't diddle in the middle.
Yeah, exactly. Dan, anything we missed?
I don't really think so. I guess while we're here, I'll just quickly comment on the dollar. Looking at that December dollar index, I'll look at a continuation chart here of it, because the dollar has been very, very weak. So we have been talking trade deals and trade balances and where all these prices are. Well, soybeans at $10 with the Dixie below 100, soybeans end up becoming extremely cheap on the international market. Same could be said for wheat and corn and all of our other export products. So long as this dollar weakness maintains, and we are seeing a little bit of support, big move down, but we're below that 100 figure, which when you go back, you can see why that 100 figure is so important historically. This is going back a decade now, that it seems to be the line in the sand, right? And we're breaking back down into this old range. The Dixie seems to do these big $10 ranges for a decade or half a decade. You can go further back still and see other ones that it does. And here we were in one, we broke out of it, we were above it, and now we're back into it. So big question is, does the dollar stay below 100? Can we get back out above it and go back into that 100 to 114, 115 range we were in? Or is this a period of dollar weakening that we're going to take all the way down to 88? And you only have to look back to the lows of the dollar in 2021 and 2018 to see how that valued against other currencies. And then from there, folks, you can definitely say there is some, at least the way the dollar's trending, what I'm trying to say is trade winds are favorable for U.S. exports.
That is some great news. We'll take it right there.
Absolutely.
Get more of this
So
stuff.
we get a question of the week from Carter here.
Question of the week.
What's your favorite movie, Joe?
Oh man, you got me on that one. I should have kept my mouth shut. I don't know. I really there are some favorite scenes from movies. I really enjoy the shoe shine box scene from Goodfellas, or the Now You Can't Leave from Bronx Tale. That's one of my favorite scenes. You ever see that one?
Yeah.
Oh, good. The Now You Can't Leave. I really enjoyed the Tom Hanks movie where he meets the volleyball on the island and has a great
Castaway.
Yeah, has a great time there, but I'm still
Wilson, right?
Hurt. Oh yeah. My feelings are hurt about that because Helen Hunt started seeing that dentist like 2 weeks after he crashed in that plane. I mean, 2 weeks. I mean, come on, geez Louise. So I don't know. That's tough business. How about you?
I'm gonna go with probably one of my favorites is I love Usual Suspects. I think the ending of that film is just so well done. Geez, more recently though, actually, and then Hitchhiker's Guide to the Galaxy is probably one of my favorite books. The movie version of it was, I think, really well done. But I just love that story. I think it's hysterical. But yeah, I'm kind of a nerd at heart. Between that and Star Wars,
Marvel movie kind of guy.
No, I never got into superheroes growing up. I was always a sci-fi nerd. So yeah, I never really got into the Marvel stuff. Unfortunately, I have a humble opinion. I don't think they do a really good job with those movies because I don't know how many times you can remake Spider-Man. But that might not be Marvel. That might be the other one. I apologize to Stan Lee and everybody else for getting that wrong. But yeah, never a big superhero guy. Always a sci-fi guy.
I'm with you 100%. I didn't even understand why they would make those movies. When they first came out, I was like, I think I went to see Captain America. I was like, I don't even understand why they would make that movie. And guys that I work with looked at me like, you have no idea what you're talking about. I was like, I do not have any idea. Right? I watched that movie and I didn't catch any of the Easter. I didn't catch any of that stuff. I was like, why would they even bother?
Yeah. Well, Hollywood's, I think, dying for content. So
amen.
Hopefully they'll figure it out soon. Well, thank you for listening to the Zaner MarketCast today. If you need more, just because you can't get enough of our two beautiful faces, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. Also, you can get the daily market commentary by signing up for the Zaner Ag Hotline, hosted by Ted Seifried. It's free and gives you access to our daily market commentary and a chance to connect with us personally. If you have a specific question about the markets, you can throw that into the link in the description here below. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat, and we'll be back with you as price action develops. Have a great weekend, everybody.
Have a great weekend.